Yo, what's up you guys? Welcome back to another weekly market update where we do take a look at the market from a technical and fundamental perspective. This week we are going to take a look at the index, the NASDAQ, Dow Jones, gold and the S&P 500 from a technical and fundamental perspective. So obviously now last week we had some news that came through, retail sales. The week before that, we had CPI data, which came through higher. And we normally know that a higher CPI reading indicates a possibility that the Fed is likely to hike those interest rates when we do meet at the end of this month. That's why the buyers on the index will always be positive. And this is exactly what I was speaking about. This week, we do have some advanced GDP, unemployment claims, core PCE, and we've got the purchasing managers index that's coming through for us as well. And it's not a relatively busy week, but next week we are going to see some very important news for the index. So for now, I do expect a correction in the market over here. However, there is a possibility for us to continue still as we expected. We did get the break above the structure over here. Now, as you guys know, we had a market that consolidated over here. After a consolidation, you normally wait for a breakout. And we had the break to the upside over here. Now this level over here acted as resistance. Market broke above resistance, broke below support, tested it as resistance. Now all of this is support. Sorry, all of this resistance is now again acting as a level of support. I do expect a pullback on the market, basically waiting for that news release to come through at the end of the month, the most important one. And then also we can see if we do look left, we also have this structure that we just need to consider, that the index is currently testing there as well. Now I do obviously anticipate this market, I would like to see this market continue higher and just continue this bull run. But if we do anticipate a correction, we need a clear break below this level of support, and that support would be in turn resistance. And then on the retest, definitely look for that move to the downside. On the NASDAQ, we can see we moved exactly as anticipated. We had that wick to the downside. From there, market just started to take off. And we can see over here, we also had a ranging market over here for quite some time, actually just for a short period, sorry about that. Quite a short period over there. And if we quickly go, and this is just also just part of, educating you guys, go over to CNBC quickly. This is the quickest way to get there. If you do want to check out the US, European markets, there we go. So we can see stock futures climb as Wall Street looks for S&P 500 to build on fresh all-time highs. It says here stocks rode are back on Friday after losing ground. The S&P broke the intraday record, and the reason for that, I'm trying to see in a bull market started October. Tech stood out amongst the S&P 500. Wall Street strengths seemingly deepen on whether the US central bank will capture economic soft landing. Investors are hoping for a series of benchmark interest rate cuts beginning in March. So they are betting that the Feds are going to not hike the interest rates, but this is normally what you see before something like that happens. I do expect this market to pull back, and when the Feds initially do give us that interest rate hike at the end of next week, at the end of this month, sorry, definitely a massive pullback expected in the market. Obviously need to wait for the market to start sifting berries before looking for any entries there as well. Next up, we've got the Dow Jones. The Dow Jones just broken above out of this consolidation market here as well, and you can see here how the market had taken everybody for a ride. You can see here we did consolidate in here, market wick to the downside, came back, retested. Retail traders, including myself, anticipated that move down. Market now broke above. From there, I do expect this market to pull back into this range, because the only thing that's going to drive this market higher is going to be the interest rate decision. Now, it's very important to keep in mind that we do have this structure here that we need to monitor when this market does pull back coming in this week as well. Next up, we do have gold. Now gold's basically also running with the back end of the dollar index. You can see gold has not moved much based on the last conversation that we had. We can see this market obviously is currently also testing very important structure. So again, if we do see the dollar index weakening back to that previous level that we've identified, then there's definitely a possibility for this market to continue higher. What I would advise to do is basically monitor the price action on the index. If you do see this market continuing higher, then by all means this gold is definitely going to continue lower. But the way we are now, we are in bullish territory, and on the index we are basically more bearish than bullish, because like I said before, I do expect the market to correct itself. I do expect this market to basically correct itself, because if you look left, you can see the target has been reached over there. So let me do that, and because of this, we can definitely expect the prices of the precious metals to continue higher in value. Next up, we've got the S&P 500, also gap to the upside. I do expect a pullback in here as well. We had broken above resistance. All of that resistance is now again turned support. Also have to take the Fibonacci from the low to the high after this impulse. We do have a 50% pullback lining up perfectly with this previous level of resistance that is now acting as a level of support. Guys, that is it from my side. Thank you for your time, and as always, cheers for years.